Here's a jaw-dropping revelation. Despite economic headwinds, the US GDP surged at a robust 3.8% annual rate in the second quarter of 2025, according to the government's final revision released on September 25th. But here's where it gets controversial. While this growth is impressive, the OECD warns that tariffs could throw a wrench into the US economy by 2026. So, is this boom sustainable, or are we on borrowed time? The economy's rebound from a 0.6% first quarter dip, largely blamed on the fallout from President Donald Trump's trade wars, was fueled by resilient consumer spending. Americans kept their wallets open, with spending rising 2.5%, up from a mere 0.6% in the first quarter. And this is the part most people miss. Even as tariffs and a slowing job market loomed, households remained undeterred, showcasing the economy's underlying strength. As Priscilla Thiagamuthi, senior economist at BMO, noted, the mighty consumer was the driving force behind this upward revision from the initial 3.3% estimate. Spending on services grew at a 2.6% annual pace, more than double the previous government estimate of 1.2%. This stronger-than-expected data suggests the economy is on solid ground, but it also complicates the Federal Reserve's plans. With the Fed already cutting rates in September due to a weakening labor market, today's GDP figures might dampen enthusiasm for further cuts in 2025 and 2026. After all, lower rates aim to boost borrowing and hiring, but a thriving economy may not need that extra push. Here's the kicker. The first quarter GDP drop was largely due to a surge in imports as businesses rushed to stockpile foreign goods before Trump's tariffs kicked in. In the second quarter, imports plummeted by 29.3%, adding over 5 percentage points to growth. But is this a one-time boost or a sign of deeper shifts in trade dynamics? And what happens when those tariffs fully take effect? Another critical point. While consumer spending and private investment grew 2.9% in the second quarter, residential investment fell by 5.1%, and declining business inventories shaved off 3.4 percentage points from growth. Federal government spending also dropped by 5.3%, following a 5.6% decline in the first quarter. So while the economy looks strong, there are cracks in the foundation. Trump's tariffs, aimed at protecting American industry and funding tax cuts, have already sparked global trade tensions. But will they backfire by slowing growth in 2026, as the OECD predicts? Or will they achieve their intended goals? What do you think? Are tariffs a necessary evil or a risky gamble? As we await the Commerce Department's October 30th report on third quarter growth, forecasters predict a slowdown to just 1.5%. Will the economy maintain its momentum, or are we headed for a bumpy ride? Let's keep the conversation going. Share your thoughts below.